Okay, welcome back again. Let's quickly move into the business of the day. Today I'll actually want to just put us through one or two things on risk management. Risk management. You see, the excellence of the game of trading, the game of trading or the business of trading is rooted in the strength of how well defined your risk management is. Yeah, I keep telling people every now and then that your show of trading unprofessionalism begins with poor risk management. Poor risk management. Forget about what you see online. There are so many unprofessional traders flexing profit from a demo account. When I see some kind of unprofessional risk that some fellows are putting on, and when I look, I'll just I'll actually decide to lose interest because what they show people is not actually the true color of the game. It's not the true color of the business. You just see someone with a $1,000 account using a very an oversized lot size, and they'll be showing you the profits. And on the flip side, I will always ask them what will happen if the trade goes into a drawdown or start pulling you into a loss. How will you feel? How is it going to affect your account, your equity? You know, professionalism in trading borders more on risk management and on trading psychology. That's where the best are bred. Yeah. So trading without an appropriate risk management is extremely frustrating, no matter the goodness of the setup you are faced with. This is something some people don't know. Some people will put up some setup and they'll say this setup has a 95%. Da, 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 da. When you have traded for quite a period of time, you will come to the realization of one truth: any trade can end in loss. Any trade can end in loss. It will help you not just to trade, but to take calculated risk. What a sound trader, a professional trader, what they trade, what they take is a well calculated risk. Anything outside calculated risk is a gambling. Is purely gambling. Is gambling. You are just playing with your hard-earned money. It will be better you spend it on luxury or frivolities than just throwing it up to the brokers. Yeah, I another thing you must bear in mind in the subject of risk management is trading is a zero sum game. That's why, having identified your edge, your strategy of play in the market, you should always be conscious of calculated risk. How much am I going to put in this trade to see how it plays out? How much am I willing to bet on this trade to prove how it's going to play out? Now this setup aligns with my edge. How much am I willing to take? How much am I willing to risk? How much am I willing to bet on this very trade? Yeah, calculated risk is where the difference lies between a professional trader and a gambler and a young man that just came across forex for the first time or trading for the first time. I keep saying this again: never go all in on a single trade. Is bloody, it's risky. Anything can happen. You don't control the market. You don't. You will never, and you can never. It takes a whole lot of money to cost a peep change, a peep movement in the market. Never go all in on a single trade, please. Every trade has only three directions: either up, down, or sideways. So why don't you just bet with wisdom? Take calculated risk, because in the long run, if your strategy has a nice win rate, you will definitely end in profit. These are what the big guys do. These are what the institutional traders do. These are what the smart traders they do. So never bet your whole account on a move, because you don't move the market. Please. I just see some fellows, they'll just man, someone called up this signal, someone did this or that. Oh, I'm gonna bet I missed the other move, but I'm not gonna miss this one. Wow. You are trading on dangerous ground. Just be careful. As a trader, if you can't sleep with your eyes closed, you are doing it wrong on the context or within the context of risk management. You're actually getting it wrong. If you can't sleep with your two eyes closed, your risk management is actually dangerous, is deadly. It's deadly, honestly. So let me just give you should I say a sneak peek into how I actually play on the game of risk management in the foreign exchange market. So this is how I take my risk. This is actually how I play my risk, and it's always calculated. It's not just something I jump into the market and I start to bet, buy, sell. No, no. So just watch what I do. To the best of my knowledge, I make sure I am always engaged in a professional approach as far as it has to do with trading the foreign exchange market. Yeah, professionalism and calculated risk always pay off in the long run. You look for what the pros, some fellows that have actually stayed long in this market, and they're actually making quite a fortune from it. Not that they don't make loss, they bag loss at some point, but they found their edge, and they are seeing a level of profitability time and time and time again. If you look at their equity curve, the graph of their equity, it's always on an uptrend. It's rising, some little drawdown, and it rises, some drawdown, it rises, some drawdown, it rises, but it's always on an uptrend. By the end of the month, by the end of the year, by the end of the decade, you always see that they are in positive. That's the excellence of nice risk management. Yeah. So take for example, yesterday I sent a signal for this trade, not just on a private group chat. I also made it public on YouTube because there is actually nothing to conceal. A knowledge is a knowledge. It's something that is there for everyone to see. So it's something that is there for everyone to see. So I put up this trade, and we're actually around this POI. Yesterday we broke above this level, and we actually around this POI. I could remember when I uploaded it, I said a lot. So let me just give you a sneak peek. If I should I say a rewind? If I wanted to take this trade, actually I did, but let me just show you what happened behind the scene. So what I'm going to do is that firstly I'm going to come here, and I will try to refine my point of entry. That's my area of interest. I will refine it down to the 15 and 5 minutes. Now, under the 15 and the 5 minutes, I will take my risk. So this was yesterday, and look at where my risk was. I was actually interested in this level. So anything below here has invalidated my bias. Now, look, let me zoom in a bit so it will be clearer. This is my risk, and I said anything below this level, this is my 4-hour POI, point of interest. Anything below here has invalidated my bias. Means I'm no more interested in long. So I checked from here to this very point. It's 16 pips, and I always go for a minimum risk to reward of 1:2. And I stretch it forth. So this is actually risk to reward 2.27. That's fine. So 1:2 plus. So I decided to take this trade. Let me take for example that I have a $1,000 account. Let's don't take it that far. Let's don't take it that far, like maybe $10,000. So let's just say $1,000 account. And as a result of me having a $1,000 account, and I wanted to risk from my risk that I have calculated, I discovered that I want to risk only 16 pips for this trade. It has aligned with my strategy. I've seen the setup. I've decided how many pips I want to lose. Now, don't just jump into the market and plug in any kind of lot size you feel like. No, don't do that. That's careless. That's unprofessional. You look for a standard position size calculator. Let me quickly say we'll jump into my FX book where they have the app, the mobile app, and you can actually go to the website. Let me say I type USD JPY, and that's it. And account currency, the base currency for my account is USD, and let me say my account size is $1,000, and risk ratio preferably always leave your risk ratio on percentage. So let me say I don't use money. Don't swap it with money, swap it with risk ratio. Let it be on percentage. I don't risk 1% of my account on a day trade. That's unprofessional. I'm sorry. However it may sound, it will be wiser to risk, since you are day trading, risk 0.5% of your account. So let me say we are risking 0.5% of my account on this trade. And from what we saw on the trading view platform, we are risking 16 pips. So the stop loss is on pip, and trade size, leave it at 1. So we are trying to calculate our lot size. So here we go. You click on calculate and you see something. Now my lot size is 0.04. Don't be tempted to use more than this. Yeah. There are sometimes, even after calculating this kind of lot size, using this very approach, you might still be taken out of the market. And that may be as a result of stop hunt or raid or whatsoever. For now, I'm going to put us through how to actually handle stop loss, raid, and all those stuffs later on. Because in case you have been taken out, you should have a better room for re-entry. And you need to know how to do that. In search of liquidity, the market can seek and destroy. So our lot size is going to be 0.04. And I'm actually risking $5. You see, if this trade ends in loss, I will not be moved. Yeah. If the trade ends in loss, I am not going to be moved. Why? I'm risking $5 out of $1,000. That means if you say $1,000 minus $5, we have $995 left. And on the scale of the risk to reward, our risk to reward is 1:2 and 2.27 plus. So let's say $5 times 2.27, and our reward is going to be $11 on this trade. $11 plus something like that. So risk to reward, I am risking $5, heading for $11 plus. Are you seeing how it moves? Now, let me see, out of 10 trades, for example, out of 10 trades, 4 ended in loss. Let me use this exact scenario. 4 ended in loss. I'll just say 4 times 5, that's 20. I lost $20. 4 ended in loss, I lost $20. And let me say 6 ended in profit, I made $66. Are you seeing the difference? So let's say 5 ended in loss, I lost $25. And 5 ended in profit, I made $55. I don't know. Let me try write it out. If 5 loss will be equal to 25. Sorry, $25, and 5 profit. 5 profit will be equal to $55. Are you seeing it? So let me go again, and 6 profits will be equal to $66. 4 loss will be equal to $20. Are you seeing it? Then let's say again, we had 6 loss, which is gonna be $30. $30. Let me get this. And 4 profit is gonna be equal to $44. $44. So this is what professionalism in trading looks like. This is what good risk management looks like. This is what calculated risk look like. In a moment, even when the market worked against you, as far as you always have a nice, now you see the risk to reward ratio that I'm using here is around 1:2. Sometimes I do a minimum, actually my standard is actually minimum of 1:3. 1:3. But on a worst scale, I make sure I leave that trade with a minimum of 1:2. But if the trade is actually on a serious drawdown, I don't mind. You should hit the stop loss because the stop loss is fixed, it's calculated. I'm not gambling over it. So imagine on a day that maybe on a month, let me just say we took 10 trades in a month, though quite actually being a day trader will trade more than that. But let's say in a month now you took 10 trades, and out of those 10 trades, 5 ended in loss, 5 ended in profit. Those 5 that ended in loss, let me say using this exact scenario, you lost $25, and those 5 that ended in profit, you made $55. Are you seeing the difference? So okay, let me do something here. So overall for the month, you still you say 55 minus 25. Overall for the month, you are still in $30 profit. Let me move this up. Then for this month here, you are still in 66 minus $20. You are still in $46 profit. Then let's come here. We'll say 44 minus $33. You are still in $14 profit. So you see what it looks like. In a month, let's say you took 10 trades. For the first one, 5 loss, 5 profits, you still ended the month in positive. That's $30 profit. On this very scenario here that we had 6 profit, 4 loss. Let me see, in a month of 10 trade, you made $46. Now, in a month you have 6 loss, 4 profits, you made $14. Are you seeing the difference? So this is professional risk management. This is calculated risk taking. Not this thing you go online, you see people saying I flipped $50 to $1,000 in one day into the. Let me tell you, let me be honest. If you try those shit, you're gonna blow your account. You will mess yourself up. It's the goal is to be winning in the long term. Is to be winning in the long term foresight, not this short term gameplay. It's too short term. You see someone who just you see someone that will just pick up a trade and flipped it from $50 to $1,000. And sometimes I just feel like, let me ask them, what will happen if the trade goes against them? So will you be owing your broker, right? So it's just as simple as that, without making or overstressing a singular point. That's just it all. Take calculated risk in your trading game and see how it's going to change for you in the long run. So I strongly believe that every one of us can do this. You can do it, and believe me, you can do it. Have a nice day. Thank you.